Have you ever wondered why, in 2025, sending money across the world still feels like we're stuck in the 1980s? Wire transfers that take 3 to 5 business days, crazy fees. Banks putting you on hold just to move your own money. Meanwhile, blockchain has proven that assets can move in seconds. And that's where XDC network comes in. Today, we're going to dive into how XDC is quietly building the payment rails for a new financial era. And if you think XDC is just another crypto, stick around because what it's actually doing may shock you. Part 1. Cross-border payments. Let's start with the biggest problem, cross-border payments. Right now, if a company in New York wants to pay a supplier in Brazil, the money travels through a chain of banks, clearing houses, and Swift messages. It's expensive, it's slow, and sometimes the payment even gets lost for days. XDC flips that on its head. With ISO 20022 messaging, XDC plugs directly into banking standards. The result, payments are instant, costs are near zero. And it works across multiple assets, not just XDC, but stablecoins, tokenized dollars, and even CBDCs in the future. Imagine a business in Chicago pays its partner in Tokyo instead of waiting 3 days. The payment clears in seconds. No middlemen, no hidden fees. That's the future XDC is making possible. Part 2. Merchant and smart payments. But it's not just about global corporations. Let's talk about everyday commerce. Right now, merchants deal with delayed settlements, chargebacks, and insane fees from payment processors. On top of that, invoices across borders? A nightmare. With XDC, payments become smart. Invoices are automated with smart contracts. Point-of-sale and e-commerce platforms can accept digital assets or tokenized fiat instantly. Settlements happen in real time. Picture this. A coffee exporter in Colombia ships beans to a roaster in Seattle. The moment the shipment clears customs, a smart contract triggers and releases payment instantly. No endless emails, no waiting on banks, no disputes. That's frictionless commerce, something merchants have been dreaming about for decades. Part 3. Custody and institutional security. Now here's the thing, big money doesn't move unless it feels secure. Institutions, banks, asset managers, hedge funds need compliance, custody, and regulation built into the system. This is where XDC stands out. It offers hybrid custody. Institutions can hold assets with enterprise-grade security. Regulators still get transparency and reporting. Yet everything still runs on blockchain speed. Think about it, a pension fund in California isn't going to risk billions without custody solutions that regulators sign off on. XDC gives them both innovation and compliance. That's why institutions aren't sleeping on XDC. They know this infrastructure is being built for them. Part 4. Fiat on, off ramps. One of the biggest pain points in crypto has always been the bridge to fiat. Retail users know the struggle. You cash out on an exchange, wait days for the wire, pay crazy withdrawal fees. It's clunky. XDC solves this with built-in fiat on and off ramps. Load funds directly from your bank, move them into tokenized assets instantly. And when you're ready, cash out back to fiat without the delays and headaches. Imagine you're a freelancer in Texas doing work for a company in London. They can pay you in a tokenized dollar on XDC. You cash out to USD in minutes. No Swift, no waiting, no extra fees. That's real utility. Part 5. ISO 20022 integration. And here's the kicker, the part most people overlook. Banks around the world are migrating to ISO 20022, a new global financial messaging standard. This isn't optional. Swift, the Fed, the ECB. They're all moving to it. XDC isn't trying to fight that system. It's designed to integrate directly with it. That means when banks switch over and the already XDC is positioned to be the bridge between blockchain and the existing financial system. This isn't about replacing banks. It's about upgrading the rails they already run on. So let's zoom out. XDC is building fast, cheap, multi-asset cross-border payments, smart payments and e-commerce integration, enterprise-grade custody for institutions, fiat on, off-ramps that work seamlessly, and full compatibility with ISO 20020 to the very language global finance is moving to. Retail investors may not see it yet, but institutions do. The question is, will you be ahead of the curve, or will you wake up when it's already mainstream? Because fading XDC now could be one of the biggest mistakes you make in this cycle. This is not financial advice, but remember, while retail sleeps, institutions move. And when they move trillions.